Actually, one of the things I might just start with is mentioning how a simple fact about taxation and the impact of taxation on behaviour can be viewed from different perspectives. I have, about 3 months ago now, I've bought a wholly electric car. So I have this fear factor of the battery running out, and not being able to go and get a gallon of electricity. You don't seem to be able to get that yet from the local station. So does that mean that I am a reformed environmentalist concerned about my carbon footprint on the planet, who's likely to vote for the Green Party? Or does it mean that I am looking to live as a rentier of tax subsidies paid to the better off by the population as a whole in terms of a £4,500 subsidy to buy the car and the lack of paying vehicle excise tax and paying the lower VAT rate on electricity compared to the tax on that there is on diesel or petrol? Or am I just mean? Or as when I put this dilemma on the Twitter, most people responded to say, you're at least 2 out of those 3 things. So I've been perplexing which one I'm not at the moment, but there we go. So what I'm trying to point out is how that sometimes assumptions about tax rates, tax incentives are very much coloured by the person's political perspectives of what they would like to see happening. So I thought I'd start with a little bit of the backdrop to the UK. Now, this is very current, 2017, but do you know I have now been meeting people in the upper reaches of HMRC and HM Treasury for over 25 years about reforms. And do you know they've never said this particular point in this Parliament is really easy for us to introduce bold tax reforms. It's always been, the public purse is especially tight this year. And then, of course, we've got such and such a thing going on. It might be that unemployment's reached a high. It might be that there are issues arising from financing one of the various wars that there have been, or demands for spending, or pension problems, or at the moment, of course, there's Brexit. So all of these are just reasons why there's a hung parliament now, reasons why, whilst in principle we like the idea of simplification, we like the idea of bold reforms, now's not the time. Now, in fact, if you look back historically, arguably the boldest chancellors, I'm going to mention Nigel Lawson, Geoffrey Howe, and for political balance, Jim Callaghan, who introduced corporation tax and capital gains tax. So those were, if you look to when those happened in the 60s and the early 1980s, those were times when the UK economy was in a perilous state, that inflation, unemployment, balance of payments, deficits, etc., wherever you looked, were immense challenges to the UK economy and to the UK government to get through. But nevertheless, those 3 chancellors were able to introduce bold measures that none of their successors from any part of the political spectrum have been able to do. Let's just have a look at a few principles about tax reforms. It's sometimes said that taxation should be simple, fair, and certain. One wag commented, pick which 2 you want. In other words, sometimes if the system's going to be simple, it might not be as fair as we would like it to be, as it's not taking sufficient account of people's particular circumstances. There's an allowance for blind people, which I can't imagine anyone in this room would not feel was entirely appropriate. Of course, it is a complexity in the system. Sometimes we want some complexity to achieve a higher level of fairness. Now, simple, as I take part in a lot of conversations and debates with other tax practitioners, although I'm a mere lobbyist now, not a practitioner. And sometimes when the word, we should simplify the tax system, I often say, well, for whom? Is this to make it simpler for the advisors or simpler for the businesses and the individuals? Because sometimes those are different. The advisors might want something that they can put to their clients and advise them on the position, but that might not be the case for the bulk of businesses and individuals who have particular circumstances. Fairness tends to be quite driven by political perspectives of we do have a highly progressive tax system at the moment, in the sense that those with the highest incomes and the highest amount of capital gains and estates pay the largest amounts of tax. Indeed, something like 28% of tax is paid by the top 1%, and 50% of tax paid by the top 10%. Now, for balance again, you might say, well, that reflects the unequal distribution of income and wealth in the country. Depends where you're coming from. But something saying that our tax system is not progressive is certainly not correct. Other features might not be as equal as one would wish them to be, but the tax system cannot be accused of being that. Now, certainty is quite a complex area itself, in fact, because politicians in the run-up to elections are always talking, have you noticed them, about clamping down on tax avoidance? These are, because no party wants to be seen as being soft on tax avoidance. They're never really totally sure what this is, because sometimes tax avoidance is taking up an incentive that they themselves have introduced. But they want to know that most people think the others are avoiding tax. We're not, so please could you clamp down on it? I'd rather see some system of clamping down on politicians talking about clamping down on tax avoidance in the weeks before the election. I think that would have a much greater dividend to the citizens of this country. So we then look at the timeframes of tax reforms. Now, there are some things that can be done very, very simply and easily. They're the minority of things. Many chancellors have had a bloody nose on something that appeared simple. George Osborne had a problem because he thought that you should pay the same amount of VAT on a pasty as on fish and chips. He misjudged the power of the pasty industry on that, and we've had the same in recent times on national insurance and other things. So but there still are some things that can be done that would simplify the system and wouldn't need too much consultation. On other areas, we need to have quite extensive consultation with individual taxpayers, other lobbyists, charities. The charities were appalled at the idea that donations to charities would only be deductible up to a certain fixed limit when that was proposed by the coalition government, because they said that if you want to get like a major, the Tate Modern or something built, you first go to your list of multimillionaires and say, well, you pop in £1 million, you get 20 of those, then you go to your list of people who might make 100,000, and it's only well down the chain you look for the £10 or the £100 someone like me might chip in. So so they were really concerned at the fact that there might be capping of those, and they said some of the projects would not take place. But that was thought to be, from one perspective, actually both the right and the left were unhappy with the relief for charitable donations. The right, because they tend to like a flat system, low rates, fewer reliefs. The left's because it gave an opportunity to pay less tax to those who were better off, albeit that when the rate was 40%, they had to give away 60 pence to get 40 pence, so it was still going to diminish the size of their wealth. So those, as I say, those three concepts often pull in different directions. Now let's just have a look at, and I'm only going to refer here to the reforms that might need some consultation. It's very bizarre at the moment that two previous speakers have mentioned about the demographic situation, the need for better pension provisions. That it's very bizarre that the wealthier you are, the higher income you get, the higher rate of tax relief you get on making that contribution, rather than it being a flat rate that goes to everyone. Now, political parties are very worried about this because roughly 15% of people pay higher rate tax, and one of the original rules of tax going back hundreds of years is that those that benefit through a tax reform keep quiet, those that lose make a lot of noise. So, and that 14% are probably, contain many swing voters in marginal seats, so the government get really concerned about reducing someone's relief from 40 to 20 or 40 to 25. So what my suggestion is that they should look at is to say, well, what we're going to do is we're going to create the level playing field with a single rate of relief, but the tax saving will pass back to those people that have lost out from the tax reform. It won't be just another raid on the better off it will pass the saving back by reducing the higher rate of tax, maybe from 40 to 35%. That would certainly simplify the system and it would remove this distortion. So that's something that could be looked upon if simplification's high on the agenda, rather than just redistribution. If we look at business taxes, now the problem, we've touched upon multinationals, and we all know these names of these, we buy their products all over the time, use their services, then whinge about them not paying tax. The Institute of Directors, IOD, we gave up a building on Pall Mall because we sort of reduced people into 116 where we are, and we gave it 120, and it got occupied by squatters who called themselves the Institute of Dissenters. Right, IOD. So I had a phone call about this, and I noticed when I was going back they'd been to Starbucks, they're on their iPads and iPhones, and all of this sort of thing, putting out information about how terrible multinational companies are. And occasionally I said to them, how about this? Don't buy their products. What? So I couldn't get to 9 o'clock in the morning without having two super lattes for £3.25 a piece. So I said, yes, you could. So anyway, so this went on so eventually I got a phone call from one of the newspapers, it was Standard, I think, Standard, and they said, well, what do you think? I said, well, firstly, we're not actually that bothered about it because it's not our building, it's the Crown Estates, So now maybe it's a shame they didn't sort of, secure the building, but it's not our building. These people are a couple of doors away. And then he said, so what's your general reaction to it? So I thought, well, I can't start saying this is terrible about property rights and, people shouldn't be doing this and all this business, They're looking to re-let it, and the Crown Estate is public money, so they're actually taking money off the public. For the time, this can't be converted to be re-let. So, or I could go for a sort of bit of a cheap shot. So I said, well, when we moved, we left some of our library there, which we didn't have room for. And there's a lot of works by Friedman and Hayek. So we hope that when they eventually do leave those, they will be better educated about economics. So now, what the problem with corporation tax is, and this is not going to go away, it's only going to get worse, is let's postulate, we've been doing a lot of future thinking, but a world where there is no tax on business. So And let's talk about Google here. Now, Google have sales teams. Google have product innovation. They have some of the legwork done in more off to put the programs together, testing and things like this. So if you sat the heads of those 15 or 20 departments and said, please could you agree how $1 of Google's profit should be divided between the entities that you control and then subdivided into the countries where your business units operate. My guess is that they could argue about that without the intervention of tax until kingdom come, if that's not a religious concept. So now we then put on top of that the fact that there's tax. What I'm saying is that a taxation that slices and dices a multinational's profits and then seeks to tax them on the country where they arise is doomed to failure. We have an international initiative called BEPS, which is called Base Erosion Profit Shifting, and it'll do a bit. It's certainly done a lot for professional advisory firms and lawyers in massive projects for them reporting on multinationals, BEPS, sometimes amounting to 7 figures in fees. So some people are doing quite well out of BEPS. So now, but it won't answer because these are getting in a faster changing world and more complex business models that there are. Corporation tax can never catch up and it will continue to fall behind. What I'm saying that we should be looking at in the UK, we should be taking the lead on, is looking to tax something that doesn't move, like business premises or the employment, by relatively small amounts, something like 5% on business occupation costs for the largest corporations. I'm not talking about SMEs here, I'm talking about multinational companies. 5% on their rates bill and 1 to 2% on their employment costs would mean that we could do away with corporation tax. And I'm absolutely sure if we did that, others would follow. And I like the idea of the UK being in the lead. Do I take questions after the session? You've raised your hand, so we'll come to you first. So that would be one way to do a reform, which is going with the flow of economics and not trying to be like Canute and block the tide. In the interest of time, all I'm going to say on capital tax is we have one capital tax that applies to capital gains made during your lifetime. And there is a very, very good way of avoiding capital gains tax. Die. Because all of the values of your assets are uplifted to their probate value at death, and when the people who you've passed those on to come to sell those assets, they get that higher base cost, and they have avoided tax, capital gains tax on that capital gain. However, there's another tax called inheritance tax, which taxes a transfer during lifetime at 20% and death or within 3 years at 40%. I always think that's pretty harsh, that you don't actually know when you're going to die, or most people don't know, and doubling the tax rate if you happen to make the wrong guess feels pretty harsh to me. I mean, in fact, it's quite funny actually. Whilst I was advisor, I wrote lots of letters to clients about a relative's untimely death. I never once wrote a letter about a relative's timely death. They've gone more than 3 years from that gift, so actually now would not be bad. So why can't we just have one tax on capital that seeks to tax all the gains but none of the capital? So your income's taxed except for the exceptions introduced by Parliament, and your capital's taxed. It doesn't depend on such an unpredictable, thankfully, unpredictable event as death. Now, what I want to talk about now is, and there was a, move this forward, I'm now going to talk to you about tax hypothecation. Now, in fact, actually, Vicky Price was sat in the front row here just before her talk, and Vicky was came from the Treasury, and the Treasury traditionally have said on hypothecation, well, we like all the money to flow through us, so we can decide where it goes, So we're not going to have money going in. Now I'm talking here about what clean tax hypothecation means is all the money collected by a tax goes to pay for the services. That service gets no other tax apart from the hypothecated tax, and similarly the hypothecated tax is only used for that purpose. So I think that would introduce, I've got 1 minute left, that would introduce the tension between people being where they're willing to put more money in, maybe to the state pension, maybe to the NHS, but they would immediately recognise that the extra costs they were going to have to meet. So I think people might be willing to devote more resources, but they would also expect greater value. So that's what hypothecation's about. The main obstacle to it is the Treasury, but I think if we're thinking to the future, that might make tax more acceptable to the population. So at the moment it's no good, because if you're on the left you say, well, why don't you reduce defence spending and maybe increase what the NHS does. If you're on the right you might say, well, we can cut public spending generally in other areas, or cut overseas aid or whatever it might be and put more money into the NHS. So there's always something else. What I'm saying is if we provide more areas where there's direct linkage, and the two I would look to are the state pension and the National Health Service. So I will finish on that point, except to say, come back to what I started with, it's very tempting to postpone tax reforms and simplification until Brexit has been delivered or the next Parliament's been elected with a majority, but to do so for as transient, minor political reasons as that would be, in my view, the wrong choice. We need some boldness now from the political class.
Thank you very much, Stephen. Our politicians seem to have a lot on their minds, which sometimes prevents them from looking at these bigger questions. I'll take a couple of questions from the online discussions and then we'll come to the floor. I think you actually probably have answered this one already to an extent, which is when you're discussing tax hypothecation. Why don't we make individuals responsible in choosing what his or her tax is spent on, rather than being told by the government what services it's spent on? Wouldn't that be the ultimate fair, simple and certain model, which would also be more, also make government more accountable to the will of the people?
I think that's something that I'm sympathetic to. I like the idea of people controlling, where the money goes and the amount that's taken from it. I come from the position, I think unlike one earlier speaker, that economies grow faster when there's a lower burden of taxation, and that the countries we look at, like the Singapores, which are growing faster, they tend to have lower burdens of taxation. The US does compared to Europe. So it's so I'm sympathetic to that, but I'm worried about that some things that we might need or might be right to do for more complex reasons don't get their fair share of resources. Some might be overfunded. I think that some on the left might not realise what massive spending we might have on security and defence if that was the case. You might find everything else was cut down to the bone, but those were very, very fully funded. It depends on the people you talk to about it. But I think that it needs to be, for hypothecation, you need to have a strong link between the service provided and the expenditure incurred. And I think that's done better on a society basis than on an individual basis.
What do you think about the use of tax to change behaviour? For example, a tax system proportional to how sustainable or unsustainable, ethical or unethical companies are, in order to promote good behaviour and to demote bad behaviour?
Instinctively against it. I'm not sure that the government are the right people to arbitrate on what good behaviour is. I think in the 1940s, the government immediately after the war thought that the answer to the country's food problem was to grow groundnuts. The problem is they wouldn't actually grow, and gave certain subsidies to grow these groundnuts. I don't think the government is the best arbitrator of what that is. Now, I don't mind nudges in certain directions to try and we've had one with the patent box legislation that says we need some more technology base. So I think you nudge it, but I think those should be short term, reasonably generous, but they shouldn't be, they're not the fundamental part. They're trying to encourage a behaviour by a temporary measure.
Who was the person who had their hand up?
The gentleman looking at his iPhone or with his hand on his head. Yes?
Well, you said that you might be able to save tax based on the number of employees, something like that. But doesn't it actually assume the company's making a profit? So if the company was making a sort of, if the company's making a sort of a net loss that you've got tax per employee, then they're going to make an even bigger loss. I mean, the idea of tax on profit is if you make a profit, you can afford to pay 10% in taxes.
It does. I mean, that is an issue of it. Of course, they already have that at the moment because there's the employer's national insurance surcharge. So if that's around 13%, so you'd be looking at making that the difference between 13% and, let's say, 14.5% or 15%. The prize would be that in investment terms, let's assume if the company's not making a profit, that they must see a prospective profit, otherwise they're going to cease their activities. So they may need to raise a bit more finance, but they'd be able to repay that out of knowing that when they become profitable, they wouldn't be losing 20%, what's going to be 17% in corporation tax. So the UK would still be competitive against our major, I'm going to say European competitors. That gives me away as a Brexiteer. Against our European partners, if with a national insurance rate. Some of them have phenomenally high rates of employment taxes. I mean, the employer's national insurance should really be called a payroll tax or something like that. It's nothing to do with national insurance. So we would still be competitive. And the companies have got to be somewhere. They're not all going to be in Singapore and Hong Kong.
Question there?
Yeah, it's a related question. Isn't it quite a bad idea to tax companies on their employment costs because it discourages them from employing anyone, and it gives a massive advantage to companies that, for whatever reason, have massive balance sheets, say an investment company or a property company that have very small levels of employment? It seems like you're just going to make unemployment increase.
Well, of course, that property company you're mentioning, I'm talking about some combination of a property tax, business rates, and an employment tax. Now, I think that would be something for the consultation to work out what the appropriate levels of those are. Now, the thing is, though, that it's simple. We know what the payroll cost is. In fact, the government are already doing it for things like the apprenticeship levy. There's a 0.5% for those with payrolls of more than 3 million to fund training costs. So it's already there. So I think that it would be, you're right in the sense that it would change around. Now, if that meant that hopefully those companies that realise the property companies are going to be making a gain from this, actually very few property companies pay tax because they're what's called real estate investment trusts, which have to make 90% distributions to the shareholders and are already exempt from corporation tax. But those companies, I think the other companies would realise, and competitive pressures would mean that would flow into the economy by the price mechanism. But I think it's a fair point that would need to be addressed in the consultation.
Okay, tax is a terrible name. There's no wonder we avoid it. Invented in the 12th century, I believe. Why don't you call it, or why don't we call it, in the case of individuals, a personal investment? Because this is what it's all about. Is you invest money to provide you with health or education or good transport system or whatever. And the hypothecation is an absolute, I think, a fantastic idea, particularly on the NHS. I would probably have all tax hypothecated online with every tutorials to say we've got to have something on defence, etc. All done automatically, all visible by everyone else, I think, like it is in Sweden. Let's revolutionise it so it becomes, we don't see it as a tax, we see it as an essential investment for being on this planet or in this country.
There's been a small move to that, of course, with now most people that are paying tax get their annual statement about where the taxes have been deployed. I think that the problem, why I wouldn't go the whole hog with you on that, is that there is also a cost of tax. It is a burden on the economy, and if taxation, investment can be too high by the public sector because it forces out as well investment by the private sector. And I tend to think that the private sector and businesses and individuals are going to make better decisions individually when you add those decisions together than the government will make. I think someone referred to HS2 earlier on. I'd rather have that cross east-west link in the north.
Oh, that's because we don't do politics, right?
Then let the government spend 70 billion on HS2.
But get rid of the word tax. That's what I would say.
I understand the point.
So we can clearly have this discussion going on a lot more. I've actually learned quite a lot just by listening to the discussion. I can see there's actually a whole bunch of different topics in here. But it's time to move on. So Stephen Herring from the Institute of Directors, thank you very much.
Thank you.